So in today's video, I want to tell you or teach you what is an order block and what is a fair value gap and how to identify these things in the market. So we are going to start with an order block. Hey guys, welcome back to my YouTube channel. If you're new here, my name is Aurelie and I am a green forex trader who is documenting her trading experiences on YouTube. As well, here and there I share the knowledge that I have as someone who has been in this industry this is my third year already. So yes, so I'll take you to my chart right now, and together we are going to identify other blocks, we are going to identify fair value gaps, and we are going to talk about how to trade on these areas. So let's go to my chart right now. Now first we are going to start by talking about what an order block is. An order block is a price level where multiple market participants are either trying to buy or sell from. Now another block can be either bullish or bearish. Remember we said in my previous video when I was talking about I don't know what I was talking I forgot, but I'm going to leave that video somewhere. You're going to see it together. In this video I talked about the fact that market has different structures. We have the bullish structure, we have the bearish structure, and we have consolidating areas. Now we have as well a bullish order block and a bearish order block. Now a bearish order block is something like this, when price is creating something like this. Some people call it supply error, some people call it order block. It all depends. Now this is my order block here, right? Now in the case of a bullish market, we are going to have something like this, and our order block is going to be here. It's going to be here. Yes. Now another block, as I said earlier, this is a definition. Another block is a price level where multiple market participants are trying to buy or sell from. This is basically what I call my point of interest, depending on the pair that I'm trading. I'm trading JBP JPY, so I use order blocks as my point of interest on the 1 hour time frame. That does not mean that the order block is the only thing that I'm looking out for. No, I am looking out for other things that we are going to talk about in this video. Now I'm going to take you to an actual chart and we are going to look at what other blocks look like. So let me take you on Euro USD, JBP JPY, and let's delete everything. Now here, for an order block to be valid, we need three things. We need to see a break of structure, we need to see an order block, we need to see a fair value gap. So without a fair value gap, the order block or the points from which price broke structure is not valid. This is what I'm trying to say. Here, for example, we have not here. Here, from here to here, we have this liquidity sweep here. I cannot call that an order block. I'm going to call that, and I cannot call that a break of structure. I'm going to call that a liquidity sweep. Liquidity sweep because it's closed with a wick and not an actual body. Now this is the body, but the wick closed took out this previous low, sorry. Now if I come here, however, somewhere here, this is my break of structure here. I don't know if you get what I'm trying to say. Here is a liquidity sweep. It is not a change or a break of structure. A break of structure, for me, a good break of structure should be closed with a full body and not a wick. When it's a wick, I consider it a liquidity sweep. So the previous liquidity got taken out and we are now on to the next liquidity, which is here. This is our next liquidity here, and I think we are going to talk about liquidity in another video. I don't want this video to be long though. So now that we have this break of structure here, let's call that a break of structure. The next thing that I'm looking out for, is there a fair value gap? Yes, this is a fair value gap right here. Next thing that I'm looking out for, is there an order block? What is an order block? An order block is a point from where a lot of buyers and sellers are trying to buy or sell from. Yeah, so this is the zone that created the change of character. This is the candlestick. So in plain language, we can say that an order block is an error or the last candlestick before reversal. That is the candlestick that created a break of structure or a change of character. So this is the last candlestick of the other color, which is going to be a bullish candlestick. This is the last candlestick before this break to the downside, right? This is going to be my other block here. This here is my fair value gap here. So a valid order block should have a fair value gap, a break of structure. So this fair value gap is valid. That does not mean that I am going to just place my entry here, stop loss there, then I target this area here. No, when I'll wait for price to tap me into this other block here, then I will go to the lower time frame and I'm going to look for a change of character to the downside that I'm going to sell, because I can come and enter here and the market does something like this and it takes me out, right? And I'll be out of this market. Meanwhile, if I wait and I go down to the lower time frame, I'm going to wait for price to change character and keeps going with me to the downside. Now let me show you another order block. This is the last candlestick before this price dropped. It has a fair value gap. You will see how price reacted to it. This is the fair value gap here, and this is the other block here, right? And if you look very well, here we had this break of structure to the upside here. So price taps into it. We are going to talk about that next time, but I just want to show you what another block should be like. The moment we saw this, price tapped here and it dropped just a little. You're going to see that this fair value gap or this other block, however, is not valid. Why? Because we don't have a change of character or a break of structure. There is no break of structure here. When you look from here to here, we have a break of structure here, and this is the other block here. I don't know if you get what I'm trying to talk about. However, if you look here, we have a break of structure here. Now we have this other block here. What happened? This price or this candlestick tapped into this. We have a fair value gap as well. This is our fair value gap here. You see? Now we have break of structure, fair value gap, other block. Price tapped into this other block here and it dropped. That is it. Now let's look for another zone where we can see other blocks. We have a break of structure here. We have the last candlestick before bullish candlestick before reversal. This is our last bullish candlestick before the last bearish. Sorry, in a bullish market we are looking for a last bearish. In the bearish market we are looking for the last bullish. So this is our last bullish candlestick before reversal. Now, does this other block has, or does this structure have a fair value gap? Yes, there is a fair value gap from here. So here, what happened? Price tapped into this fair value gap and it moved to the upside, right? Now let's look for another zone. We have this zone here. This is a change of character here, right? We have this tiny other fair value gap. We have a very tiny fair value gap here, very tiny, like very tiny. We have this tiny fair value gap here. Price tapped into it. This is our other block here. This is our other, oh my god, what's happening? This is my other block here. Price tapped into the other block and it dropped. So this is what an order block is. Now let's talk about a fair value gap. What is a fair value gap? A fair value gap is a gap that exists between 3 consecutive candlesticks in the market. Sometimes price reacts on fair value gaps. It depends on the pair. For people, or for me, I have traded gold before and I'm still trading gold, not as frequent as I used to do. But the thing with gold is that I've noticed, this is what I've noticed from studying, that gold respects fair value gaps a lot. But what I've noticed with JPY is that JPY respects other blocks a lot, especially on the 1 hour time frame. Now this is a fair value gap here. You see this large gap here, as I said, is the gap that exists between 3 consecutive candlesticks. 1, 2, 3. So this is 1 candlestick, 2 candlesticks, and 3 candlesticks. So between these 3 candlesticks, there should be a gap. This is the gap here. This is what we call a fair value gap. Now, the bullish candle before the break of structure, because we have a break of structure, of course we do. This is a previous low. Price broke structure here and left this gap. So what are we looking out for next? We are looking for an order block, which is here. Right, let's name them accordingly. This is our order block, this is our fair value gap here. So now what am I waiting for? I am waiting for price to come back here before I look for my sell. That is it. So trading smart money concepts, there are other things that you should need to look at. That is what we call advanced smart money concept. But now I just want to talk about these basic ones, which is this break of structure here. Right, let me take you here so I show you what I'm saying. We need to see a break of structure. Good. Next thing we are looking out for after this break of structure, we want to see, for an order block to be valid, this is our order block here, the origin that created a break of structure. Yes, now that we have this order block, we need to see a fair value gap. No fair value gap, that means that is not an order block. This is our fair value gap here. Right, now that we have this fair value gap, we are expecting for price to come back like this. We are expecting for price to come back here. It's not going to come back directly, but I just want to show you before we buy. So in this case, we have a bullish order block. In this other case, when we see something like this, we have a bearish, sorry, let me delete this and do it again. In this case, like this, we have a bearish order block, something like this. Now that this order block is bearish, not that this structure, sorry, the structure is bearish, we want to see an order block. Cool. Does this order block have a fair value gap? Yes, it does. That means we are expecting for price to come back here before it keeps dropping. So that means we are going to have our entry here, stop loss above. Wait a minute, please. Let's do that here. We're going to have our entry here. What is this? 1 minute, please. We're going to have our entry here. What the hell? What's going on? Okay. Entry here. And our stop loss is going to be below our order block. We are going to target this high here. So that is it. That is what an order block and a fair value gap is. In another video, or maybe some other time, we are going to talk about something else that is going to be liquidity. If you want to see a video on what liquidity is and how to trade liquidity, please leave a comment in the comment section, and I'm definitely going to do a video about that. So this is basically what I had to share with you in this video, and I hope you learned one or two. If you did, please do not forget to comment, like, and subscribe. Also, turn on your notifications so that each time I'm posting a video, you fall among the people who are aware that I posted a video, if you get what I mean. So thank you so much for watching, and see you next time. Bye.